Good morning, everyone. OMC Group welcomes you to our webinar, Panama Law 254, in which we will address the most relevant aspects of the obligation to maintain accounting records. My name is Stephanie Escudero, and I am currently the Marketing and Customer Experience Manager at OMC Group, and I'll be with you as a moderator throughout this webinar. I would like to start with a brief overview of OMC Group. We are an international company over 65 years of experience within the corporate, fiduciary, and administrative services industry. We serve a global clientele across our customer service offices in Panama, Uruguay, Dubai, Geneva, and Hong Kong. We offer incorporation or registration of companies in the most recognized jurisdictions around the world, including the BVI, Bahamas, Belize, Panama, and Nevis, to name a few. OMC is licensed to act as resident agent in these and other jurisdictions, and this allows us to support our clients with a comprehensive service executed by a highly qualified group of professionals in each of these jurisdictions. As a part of our fiduciary services offer, we can assist in the formation and administration of private interest foundations and trusts. We hold fiduciary licenses in the BVI, Costa Rica, Nevis, and New Zealand. And through this, we can serve our clients with tailored solutions. OMC Group has a division specialized in administrative services for entities within our administration or outside of it. We offer accounting services, compliance, ship registration, and trademark services, among others. And to formally start this session, it is a pleasure for me to introduce you to my colleagues who will be our speakers today. Karina Sanin. Karina has been part of the OMC Group for over 8 years as a commercial vice president, responsible for the development and execution of OMC commercial strategy. She has a Bachelor of Science in Business Administration from the American University and is a qualified professional with over 20 years of experience in client management in the fiduciary and legal services industry. Welcome, Karina. Hazel Jaramillo. Hazel is a certified public accountant with more than 15 years of experience in the accounting sector. Is a member of the Panama Accounting Bar and has a degree in economics and in accounting with the MBA from the Regis University in Denver, Colorado. Welcome, Hazel. Now it is time to present the agenda for today's webinar. We will begin with the Panama Law 254 and its general aspects to go over the most relevant details of the accounting records obligation, including the background, definitions, legal entities obligations, resident agent obligations, the non-compliance sanctions, and OMC Group accounting services. And with this, I formally welcome Mrs. Karina so that we can start with this webinar. But we confirm also that our Q&A section is already enabled so that you can ask your questions through the webinar, which we will be answering in a special section at the end of this session. If for time reasons we cannot answer all of them, we commit to respond to each one of those queries to the emails that have been registered in the platform. And now, welcome, Karina.
Thank you very much, Stephanie, and good morning to everyone here with us today. Wow, we have a really large audience. I see many countries represented, and I'm thrilled to have the opportunity to share this space with all of you. Today, we will be addressing recent changes in Panama's legislation, specifically changes driven by the Law 254, which was enacted in November 2021. As you can imagine, some of the concepts that we will be reviewing today are quite technical, and we have done our very best to present them in a way that is easy to follow and to understand. At the end of the presentation, as Stephanie mentioned, we will have a Q&A session, And we will be very happy to answer your questions. And if for whatever reason we're not able to answer them live, we will answer them via phone or via email. So please do use the Q&A icon in the bottom of your screen so we can work properly on the queue and get to your questions towards the end of the presentation. So having said that, let's get started with some background to help us kickstart this conversation. Let's start with a general overview of the law so we are all on the same page and we can better understand the essence and the spirit behind it. In recent years, Panama has made enormous efforts to modernize its regulatory framework in order to cope with global changes in terms of tax transparency, the prevention of money laundering, financing of terrorism, and the proliferation of weapons of mass destruction. In this regard, Panama has evolved to meet international standards, and this adaptation is a clear and strong message which reflects Panama's commitment to the international community to comply with the guidelines and recommendations of the OECD, the Organization for Economic Commerce and Development, and of course, the Financial Action Task Force. Even so, we have many challenges ahead, and I think one of the most important ones is being removed from the discriminatory lists, which, as you can imagine, weigh heavily on our country's economy and reputation. Just to give you some information on this, a few weeks back, a Panamanian delegation met with the Financial Action Task Force to review the 15 key improvements that Panama has committed to in order to be removed from these lists. And so far, we've been able to implement successfully 8 of the recommendations in the action plan. The remaining 7 are being worked on as we speak, and in fact, they are the key drivers of these regulatory changes. In this relentless effort, Law 254 of 2021 was born. The law introduces adjustments to this regulatory framework that our country has been adopting, and you will see in the coming slides that it strengthens existing laws, and it also implements new requirements or add-ons, if you would, to certain laws that have previously been enacted. So which laws are being drawn upon? Which are the laws that we will be referring to today? There are 5 laws, and I'm going to mention them very quickly and in chronological order. Law 23 of 2015, which adopts measures to prevent money laundering, the financing of terrorism, and the proliferation of weapons of mass destruction. Law 51 of 2016, which establishes the regulatory framework for implementing the exchange of information for tax purposes. Law 52 of 2016, which introduces the obligation for all entities incorporated under Panamanian law to keep accounting records and supporting documentation. And I will make sure to reference this law throughout the presentation because, of course, it heavily influences Law 254, as you will see in the coming slides. Law 124 of 2020, which creates the Superintendents of Non-Financial Entities, the SSNF. This superintendence aims to regulate and supervise non-financial entities in their efforts to prevent money laundering, the financing of terrorism, and the proliferation of weapons of mass destruction. Non-financial entities such as law firms and registered agents. Law 129 of 2020, which creates the private and unique system of beneficial owners for legal entities. As you can see, many, if not all of these, follow international trends and standards. And of these 5 laws, I must mention that 3 of them directly impact legal entities, as you will see in the upcoming slides. And also, of course, if you look at the chronology of these laws, you can corroborate Panama's marathonic efforts in complying with international global standards. So let us review how these laws present the framework for the 254 law, which again was enacted in November 2021, and its implications in terms of accounting records. So it begins with Law 52, enacted in 2016. This law requires all legal entities, including private interest foundations, who do not perform acts of commerce in Panama, to keep accounting records and supporting documentation as of January 2017, and for a period of 5 years. Supporting documentation includes, but is not limited to, statements of account, invoices, receipts, contracts, titles, shares, and any other documents that can show the financial position of an entity at any point in time, and that allows for the preparation of financial statements. Okay, so this law was then regulated by Executive Decree 258 in September 2018. The regulation mandated the resident agents know the physical location where the accounting records are kept and that we have the contact details for the person maintaining them. This is really important and it presents the framework for Law 254. Then comes Law 254 of November 2021. And it is important to mention that this law has not been regulated yet. We expect it to be regulated shortly, but it's important to mention that as of today, it has not been regulated. The law updates the definition of accounting records as we will define in the next slides. It modifies the period for which accounting records shall be kept, and it mandates the resident agent to be provided with the accounting records. It also makes it a requirement for the dissolution of the entity for to send accounting records to the resident agents for the 5 years prior to the dissolution of the entity. Lastly, a private registry of ultimate beneficial owners will be established, and this platform will only be accessed by competent authorities in response to investigations, again related to money laundering, tax evasion, the financing of terrorism, and the proliferation of weapons of mass destruction. More on this on next slides, but let's move to very quickly go through the definitions that I just mentioned, and I will read through this verbatim to ensure nothing is lost. Accounting records. So accounting records are those that clearly and precisely indicate the operations of the legal entity, its assets, its liabilities and equity, as well as those that serve to determine the financial situation with reasonable accuracy at all times and allow for the preparation of financial statements. Supporting documentation, and this is a question that we will address later on and that we receive very frequently. So supporting documentation is one that includes contracts, invoices, receipts, and or any other documentation necessary to support the transactions carried out by the legal entity. Financial statements are those composed of the balance sheet, state of results, statement of changes in equity, and statements of cash flow and the notes of the financial statements. Competent authority. The competent authority is a Ministry of Economy and Finance or its delegate, Panama's General Revenue Service, known as the DGI, the Public Prosecutor's Office, and the Financial Analysis Unit, known, of course, as the UAF. So after defining these concepts, the question we ask ourselves is, okay, what entities need to comply with the obligation to keep accounting records? The simple answer is that the law applies to all entities incorporated under Panamanian law, including corporations, limited liability companies, private interest foundations, as well as any other type of entities incorporated in the Republic of Panama. At this point, and already knowing that the law applies to all Panamanian entities, I want to mention one of the key differences between the Law 52 and the new Law 254. Whereas Law 52 refers to all legal entities that do not carry out operations in the Republic of Panama, Law 254 makes it clear that all entities, even those that are to be exclusively dedicated to holding assets inside or outside the Republic of Panama, fall under the scope for the accounting records requirement. And speaking of holding assets, I would like to introduce my colleague Hazel and take this opportunity to ask her a question that we have been receiving from clients and that I've already seen today in the Q&A. So Hazel, thank you for being here today. I appreciate your experience and I'm very honored to have the opportunity to share this webinar with you.
Thank you, Karina. Likewise.
So Hazel, okay, if I am a foreign individual and I have an entity resident in Panama that owns works of art, do I have to comply with this law?
Karina, in order to answer to your question, I should mention that the most important thing here is that the entity is incorporated in Panama. The law does not make any distinction about the nationalities of the owners. Since the entity is classified as a holder of assets who exclusively owns works of arts, as per your explanation before, this entity needs to comply with Law 254. Please let me explain further here and indicate that all entities incorporated in Panama must keep accounting records, if not because of Law 52, because they have active operations in the Republic of Panama and are already subject to the Commercial Code of the Republic of Panama. So to answer to your question, yes, the holder of works of art, whether a Panama national or not, should comply with Law 254, and it will be required to keep accounting records and supporting documentation within the entity.
Okay. Okay, that makes sense based on what we have covered so far. Excellent, Hazel. Thank you for answering this question. And, with that, let's move on to cover some of the exceptions of the law, because of course there are some exceptions. The following entities will be exempt from the obligation to provide original accounting records or copies to the resident agents. Entities operating within the Republic of Panama, because as you mentioned, Hazel, the Panamanian Commercial Code applies to them. Entities listed in a recognized local or international stock exchange. Entities owned by international, multilateral, or state organizations, or owners or charters of vessels resident exclusively under the international service of the Panamanian Merchant Marine. And so now we have covered the definitions, the scope, and the exceptions. So let's take a look at what your entity needs to do in order to comply with the accounting records obligation. So the first obligation is to maintain the accounting records and supporting documentation for a minimum period of 5 years. These accounting records and supporting documentation may be kept in the offices of the resident agent within the Republic of Panama or in any other place inside or outside the Republic of Panama. And this obligation, it's important to mention, comes from the Law 52, which we have mentioned earlier throughout the presentation. The second applies for cases where they are kept in a different place from the offices of the resident agent. And in this case, the entity needs to provide in writing the physical address where the accounting records and supporting documentation are kept, and the name and contact details of the person who maintains such documents in their custody, including, of course, the physical address of this person. If there is a change in the person keeping the accounting records and the supporting documentation in custody, the legal entity must inform the resident agent in writing immediately the name and the contact details of the new person keeping these documents and the physical address where the documents are being kept. And this is another important change, because before, changes could be notified within 15 days, but now they need to be notified immediately. So the third obligation is an adjustment, and it establishes that legal entities must provide annually to the resident agent by April 30th, the accounting records or a copy of the accounting records for the fiscal period that ended on December 31st of the immediately preceding year. In this case, the year 2021. And it's important to note that it is expected that the entity has maintained accounting records and supporting documentation for the last 5 years. That is since 2017, when Law 52 of 2016 was enacted. I would like to point out that upon request from the competent authority to provide copies of the accounting records, any entity that has a special or different accounting period must present the authorization for the use of that period in accordance to the laws of the country where the accounting records are being kept. And finally, entities must deliver to the resident agent a copy of the share certificates and updated shareholder registries. This is also very important. And this is a requirement that was regulated by Law 52, and it was reiterated by Law 254. So with that, I think that most of you will want to take a screenshot of the next slide or a picture, but please know that we will share with you the presentation, so there's no need to do so. And the next slide will answer a very important question. So what information must I provide to my resident agent? And again, it's important to mention that the law has not been regulated yet, but it clearly states that entities that operate and carry out acts of commerce outside of Panama need to provide a journal and a ledger, and upon request must provide supporting documentation. Entities that do not perform acts of commerce, so non-operational companies dedicated exclusively to be asset holders inside or outside the Republic of Panama, shall provide information that demonstrates the value of the assets, the income received from such assets, and the liabilities related to such assets. It also establishes that entities dedicated to the purchase and sale of credit titles and public or private commercial securities for profit in their resale, or by any other means of commercial speculation, must submit an account statement and the balance sheet for the entity. So Hazel, here I want to make a pause because we have already received very interesting questions related to different types of assets. So let's see. Hazel, what should I provide for my company that only owns real estate outside of Panama?
Very good question, Karina. As you mentioned, this is a common question from our clients, where we're talking of one of the main uses that are given to the Panamanian corporations, owning properties worldwide, such as condos, apartments, and homes in general. Whether the property is located in Panama or outside of Panama, the fact that the company only holds assets, it falls within the scope and is obligated to keep accounting records, and the supporting documents must be kept by the entity. Accounting records must be provided to the resident agent. We suggest, at the very least, a balance sheet showing the value of the property. The supporting documentation that the entity must keep will be the public deed, which has the details of the cost of the property.
Mm-hmm.
The liabilities that might be related to the asset, in this case, the property, if the property was acquired by a bank loan, the entity will need to keep their supporting documents, such as the bank mortgage statement, which shows the balance due. The shareholders' equity composed of the value of the shares issued and the other components of equity. The other suggestion, Karina, is to issue an income statement. If the property is not being rented, it will be composed, generally speaking, of government annual tax and resident agent fees, unit maintenance fees, and property taxes. If the property is being rented, the entity must keep the rental invoices, receipts, or the bank account statements showing the income received. As you see, Karina, that's our suggestion.
Okay. Okay. Thank you, Hazel, for clarifying that for us. And I have another one here, since we have you on the speaker. I have another one here that I think is an interesting one. And it's another question that we've been asked a lot. So what happens if my company has never operated? So the client incorporated a company, but the company has no assets. It has never conducted any activity. What happens then?
Sure, Karina, that is another question we receive frequently. What do I do if my entity has not operated? In this regard, please note that all Panamanian entities must keep accounting records and supporting documentation, such as we explained before. If the company has not performed the activities for which it was originally incorporated, please bear in mind that there are transactions since the incorporation. For example, the subscription of shares. In this case, our suggestion is to keep an initial balance sheet showing the shares issuance and also the government annual taxes and the resident agents fees, expenses, which can be perfectly booked and presented in an income statement. As you can see, Karina, again, we suggest an income statement and a balance sheet as best practice.
Okay, that makes sense, Hazel. Thank you. And I'm sure that we'll have some follow-up questions on that one. And I see a few questions related to our next slide, so that's good. So what do I do if I want to dissolve this entity? How does this law impact other legal processes? So let's take a look at this closely, because of course, the implementation of this law has an impact on other legal processes. And I'll start with the two most frequent legal processes that we have been getting questions on. So the change of resident agent and the dissolution of an entity. Impacts on both. There are impacts on both. So let me begin with a change of resident agent. In this case, the legal entity must provide the new resident agent prior to the registration with the public registry, the accounting records and supporting documentation or copies thereof, which moving forward must be kept at the office of the new resident agent. That makes sense. In cases where the information is not kept at the office of the resident agent, the name and the contact information, as I mentioned earlier, for the person who keeps them, including the physical address where they are kept, is required. And the public registry will only register the public deed if it contains the express declaration of the new resident agent, that the corporation has complied with this provision. So that's very important. As for dissolutions, the accounting records and supporting documentation or copies dating back 5 years, this is another very important aspect, dating 5 years prior to the registration of the dissolution must be maintained and available by the resident agent. As with the change of resident agent that I just mentioned, the public registry will only register the public deed if it contains the express declaration of the resident agent that the records are in possession, whether they are originals or copies. So for example, if today, June 7th, 2022, I decide to move forward with the dissolution of my entity, in order to do so, I must send the new resident agent original or copies of the accounting records and supporting documentation dating back from 2017 to 2021. And as resident agents, they must keep my accounting records or copies. This is for the case of the dissolution. They must keep my accounting records or copies for 5 years. So from now, from 2022 to 2027. So as you can see, the law does create new obligations and responsibilities for both the legal entity and for the resident agent. And I'll outline some of the responsibilities of the resident agent in the coming slides. So let me start by the first obligation. The resident agent must present an affidavit before the competent authority on July 15 of every year, containing the list of legal entities for which the service of resident agent is provided. Agents need to indicate the number and the unique taxpayer identification. So the unique taxpayer number, it's known in Panama as the RUC, R-U-C. And the declaration must be presented for all entities based on 3 classifications. The first one is for legal entities whose original accounting records and supporting documentation are kept at the office of the resident agent in Panama. The second classification is for legal entities whose original accounting records and supporting documentation are kept in another place different from the office of the resident agent inside or outside of Panama, and for which the agent has copies of the accounting records and the contact information of the person who keeps original accounting records and supporting documentation in custody, including, of course, the physical address where they are located. The third classification is for entities for which no information has been provided. As I mentioned earlier, the regulation of Law 254 is still pending, so we are not sure of the exact format in which this declaration must be submitted. This has not been confirmed yet, but we will let you know as soon as we know. And I want to mention some of the additional responsibilities of the resident agents, because we've also received a few questions on this. I did mention this earlier, but just to reiterate, agents need to keep accounting records for 5 years counted from the last day of the calendar year in which the transactions occurred. We also need to provide the competent authorities with the accounting records and supporting documentations at any time upon request. And finally, agents are to maintain copies of the share certificates and shareholder records at their offices at all times to meet with this requirement. So let me pause here and turn it over to Stephanie. We have a very quick validation poll on what we have covered today so far. And I want to make sure that I'm being very clear on the key points. Our main goal today is to provide some insight and to help you determine what are the next steps for your entities or for your clients' entities. So thank you, Stephanie. I'm glad to have you here, and let's move forward with the poll.
Thank you, Karina. Yes, this is a perfect time to carry out the review that allows us to validate that all the information that have been provided so far has been communicated, as you said, clearly and concisely, especially those relevant aspects that may be necessary to comply with this obligation. We invite you to participate, and at the end, we will confirm the correct answer. And the question is, what entities must comply with accounting records obligation? Option number 1, corporations only. Option number 2, private interest foundations and corporations. Option number 3, all legal entities registered in the Republic of Panama, including corporations, private interest foundations, limited liability companies, or any other kind. And the last option is none of the above. Well, I think it's a very good information that we are receiving here, and I am so happy to confirm that the 98% of the attendees have selected the correct answer.
That's good.
Very good news. So just to confirm, yes, the correct answer is option number 3. All entities registered in the Republic of Panama must comply with the accounting records obligation, including corporations, limited liability companies, private interest foundations, or any other kind. So thanks for participating, and I pass it on to Karina to continue with the webinar.
Thank you, Stephanie. And while you were working on the poll, I was taking a look at the Q&A, and it's good to know that many of the questions we've answered and many of the questions we will be answering throughout the presentation. But again, if we don't get to your questions, we'll answer them and follow up to the webinar. Okay, so let's move on to the next important topic for discussion. And again, a source of many questions from our clients, what are the deadlines? So let's spend some time talking about the deadlines. The first deadline that we have is for the legal entity. The legal entity must provide the resident agent by April 30th of each year, the accounting records for the resident agent to keep in their office. This is the first deadline and a very important one. The second deadline is for the resident agent. Resident agents must submit the affidavit that I mentioned earlier by July 15th of every year. But as you can see, because this is a new law, and as I've mentioned many times now, it's not been regulated yet. We've been granted an extension for this year. So all legal entities incorporated before December 31st, 2021 will have until October 31st, 2022 to provide the accounting records. And resident agents must file the affidavit before the competent authority no later than December 31st of 2022. So now we have covered the why, the what, and the when. So let me make a pause here to ask Hazel another important question. Hazel, what happens in the case of a private interest foundation? What happens with a private interest foundation whose patrimony is composed of assets? What do I need to provide to comply with this requirement?
Sure, Karina. Regarding the question, what accounting record does a Panamanian private foundation must send to its resident agent? Please let me explain that private foundations are mainly used as asset holders, usually shares in other entities, real estate properties, and others. As we know, the main difference between Panamanian corporations and Panamanian private interest foundation is that the corporations are used mainly to perform commercial activities, and the private foundations are used mainly for asset protection. Corporations issue shares that represents the participation of the owner. On the other hand, the Panama private foundations do not issue titles, although they are constituted by Capital II. We call it in Panama patrimony, but the same is not composed by shares, but by the founder's contributions. An example to illustrate your question, Karina, if a Panamanian private foundation receives today as contribution shares or participations in other entities, your resident agent should have the details of the investment made, as well as the details of the initial capital. With these supporting documents, very simple accounting records can be generated, summarized in a balance sheet and an income statement.
Okay, well, thank you, Hazel. We already have a few follow-up questions to that one, so we'll work on those at the end of the presentation. And by the end of this presentation, I'm sure that everyone will know your name, and she's the right person for these questions. So I'm happy to have you here. Okay, so we've covered now the what, the why, the who, and the when. So let's get on and discuss what happens if I don't comply. This is an important question. What are the consequences? There are consequences for both the entity and the resident agent. So we must work hand in hand to avoid them and to comply with these new requirements. Let me walk you through some of the consequences. Starting with a legal entity, there are fines between $5,000 and $1 million, considering the seriousness of the offense, whether or not it's a reoccurring offense, the magnitude of the damages caused. Of course, suspension of the corporate rights of the entity. It will not be able to register any legal transactions or documents in the public registry. It will not be able to issue any type of public registry certificates. So all corporate rights will be suspended. And most importantly, it will enter in a compulsory administrative liquidation. So this is something to keep in mind. As for resident agents, also fines between $5,000 and $100,000. The seriousness of the offense will be considered, whether or not it's a reoccurring offense, and of course, the magnitude of the damages caused as well. So as you can see, the fines are steep, and we know that this can generate anxiety. We want to make sure that you are confident and that you rest assured that we are here to help you. We're here to help your clients. So I want to outline some of the ways in which we can help. As some of you may know, we have had a structured practice, a structured accounting practice for accounting services for over 10 years now. And we developed this practice really in response to the enactment of some of these new laws that mandate entities to keep accounting records. We've been working across multiple jurisdictions, including BVI, Panama, Nevis, and others. And we have a specialized accounting team that can assist our clients in the preparation of accounting records, both for operating companies as well as asset holding entities, which, as we discussed earlier, also need to comply with the requirement. So once we've had the opportunity to review your entity, we can draft a proposal tailored to your needs, whether it's a very simple balance statement or a more complex financial statement. We also have public accountants and staff who can sign off on the accounting records upon request. This is not mandatory, but we do get requests from clients, and in some cases it's mandated as an additional formality for other countries. So we do have authorized public accountants in staff. And I'll pause here to ask you a very quick question, just so we can better organize ourselves to serve you and to follow up from this webinar. So are you interested in having us contact you to discuss your particular entity? You can just answer yes and no to this very quick poll, and we'll make sure to follow up with you and follow up to the webinar. So it's a simple yes and no answer, and we'll move on to the Q&A section, which I'm sure that most of you are very excited about. Okay, Stephanie, let me know when we're done with that.
Yes, I think we're ready. And thank you, Karina. And thanks to all that have participated with their questions in our Q&A section. We have received so many interesting questions, and we hope we can answer all of them live. In case, for time reasons, we cannot answer all of them, we commit of getting back to all of you through the emails that have been registered within the registration form. So we're going to start it with this question, and I think Karina will be the one who is designated to answer this one. And the question is, who will have access to the information provided to the resident agent?
Okay, so it's an important question, and I think we mentioned it throughout the presentation, but it's an important question because the law clearly states that the information will be kept in the files of the resident agent, who will only provide such details upon formal request from the competent authority. So the Ministry of Economy and Finance or the Revenue authorities, so only the competent authority. And I think here it is essential to highlight the importance of having, a diligent resident agent capable of performing these operational burden, because as you may recall from our last few slides, there are the responsibilities that resident agents will have will only continue to increase. So it's really important that you're working with an experienced team that has the administrative acumen and the proper technological infrastructure, and of course, all the security measures to safeguard and protect the information. So this is something that we take very seriously at OMC and that we're committed, that we're very committed to. We will continue to adapt to comply with all regulatory requirements, but of course, with the highest standards of IT security. So thank you for that question. It's a good one.
Thank you, Karina. Another one will be, and I think it's going to be also you. Can an entity be restored after its corporate rights have been suspended?
Okay, so the quick answer is yes. The entity can be restored within 1 year after the suspension of corporate rights. Of course, you must go through all the due diligence process to update all information and ensure that it is compliant with all the due diligence requirements. It must also be in compliance with all the accounting records requirements. All the fees must be paid in full, including all annual maintenance fees, government fees, all the surcharges, the fines, if there are penalties, everything must be paid in full. And yes, we can assist you in restoring your entity in the event that your corporate rights have been suspended. If you need a quote, just let us know and we'll be happy to provide that for you.
Thank you, Karina. I think the next one will be a very good one because it will clarify some doubts from our audience. And it reads, which jurisdiction does not have the accounting records obligation?
Well, okay, so the truth is that most jurisdictions have the requirement to keep accounting records. I think the difference is whether or not that resident agent needs to keep them in their office. So, you know, I think very few jurisdictions do not have any accounting records requirements. You know, some examples of jurisdictions that do have the requirement but do not mandate that the registered agent keeps them in file: BVI, Anguilla, Seychelles. So in that sense, Panama is ahead, but it's a matter of time. As I mentioned earlier, these requirements follow global trends and we are complying with international standards. So honestly, Stephanie, I think it's a matter of time.
I agree with you, Karina. Thank you very much. Hazel, I think this one will be for you, and this is a very good one also because it's an example and our audience can be very, this is going to be very useful for them. For an entity that only maintains an investment account, it is enough to send the account statements to comply with these obligations?
Sure, Stephanie. Please keep in mind that this law has not been regulated yet. For now, a balance sheet or a bank account should be enough for companies that hold investment accounts. Bear in mind that the law has not been regulated yet. As of today, that would be acceptable.
Thank you, Hazel. Next one will be a short one, but with very specific accounting detail. Hazel, what is accounting journal and a ledger?
Stephanie, please let me answer this question in very simple terms. The two ledgers are generated when the accountants book the transactions, and based on that, on the account balances in the general ledger, financial statements can be prepared. As you can see, it is a very simple way to explain it, Stephanie.
Thank you very much, Hazel. I think we have time for one last question, and as will be as follows. If an entity does not have a bank account, its sole purpose is to be the owner of real estate located in Panama, whose expenses are paid by the entity's shareholder, what do they need to comply with this obligation?
Good question, Stephanie. Let us review. What would be the minimum accounting record requirements for a Panama corporation, as you mentioned, with no bank account, no income, which holds a property that is used by a family and the owners pay for the company's expenses? What is the minimum that should be turned into the resident agent in order to comply with the law? Our suggestion again is a balance sheet showing the value of the property, and the supporting documentation to be kept by the entity would be the public deed, which has the details of the cost of the property. An income statement showing the expenses paid by the owner on behalf of the entity, which might be booked as a shareholder loan or as part of the paid-in capital. For example, if the share capital is $10,000 and the owner paid more than that, they can decide whether it should be booked as a shareholder loan or as a share premium or additional paid-in capital. Quite simple, Stephanie.
Thank you very much, Hazel. Well, we still have some additional or more questions in our Q&A section, but in order to answer them properly, we'll get back to you through the emails that have been registered in the system. And I wanted to thank you, Karina and Hazel, for answering those questions and for the great presentation. It was a pleasure to have you with us today.
Our pleasure, Stephanie. Thank you.
You're
welcome. Thank you everyone thank you all for attending. We hope you have learned and enjoyed this presentation. And with the purpose of continually improving for our clients, we appreciate your feedback through the following quick survey that will appear at the end of this session. Your comments are really valuable for us and will help us to improve and also to obtain more details to prepare new webinars on topics that you may want us to develop. And we will be sending to all the registered emails in the platform an infographic with the relevant aspects of this law and also the presentation that you can have it handy for future reference. At OMC Group, we remain at your service and ready to support you. Please get in contact with us in case of any doubt or request related to this matter or to any other detail from our product and service offer. We will be happy to help. And again, we appreciate your assistance and wish you a very good evening or morning based on your time zone. Thank you very much.
Thank you.
Bye-bye.
Thank you.
Bye.